Hi, this is Graham Bibby on the 11th of December 2015, coming to you with your market roundup and also a bit of a year's roundup, let's say. I know we're a bit early for the end of the year, but last week's market action just for me is another reflection of what's been going on this year and even last year. Um, in front of me on the screen now, we have the Russell 2000, and from the beginning of this month, we've had this sell-off. Um, we were getting breakouts again to the upside. We pulled back, then we were breaking out again, and then we've pulled back. And this seems to be the story of the last few years because we go back here. This is at the end of 2013, and that's where we are now. And we've had all this volatility in between. This is, if you're trend following, you follow upward trends or you get out of downward trends. And normally, once trends start, they persist. The worst kind of market for this kind of methodology is the market of the last 2 years. If you don't follow this methodology, you can be left in a situation like in 2008 when the market went down over 50%, or in 2000, 2003 where it went down 50%, in some markets 90%. So of the available methodologies for investing in the market, this is one of the better ones. But having said that, this is downtrend, this is uptrend, 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 down, up, down. Then we broke out. This seemed to be a reasonable uptrend, and at the end of June, which was here, we'd actually registered a nice profit for that part of the year. And then we got beaten up because this downward play gives us a sell, upward play almost a buy, and then we fell off a cliff here. We got out of here and looking good-ish, but then what's happened? We got messed up because we got an uptrend here, breakout, and then a collapse. Why would you break out to the upside only to collapse again? Crazy. And then you move to new lows, called a climatic sell-off here, which is everyone getting out. So if you reverse from there, which we did, and then break out to this upside, it looks like we've got a brand new uptrend. All the selling is cleared, and we should be in a new bull market. Then we sold off, then we're up, then we're down. So not conducive to what we're doing. This is the Dow Jones 30, similar pattern, ups, big downs, side, 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 up, down, big down, start to break out, down. No trend here, just upward movement. We need to wait for a correction to buy, but as soon as you get one, then we reverse to down. Then we broke out to new highs, but then down. Then we broke out to new highs, then down. Then we broke to new highs, then down. This is not normal. And then we've had this significant downtrend, then a breakout, and then a sell-off. Very, very difficult. Last night was up 0.47. It was up more than that, nicely more than that before, but then it sold off towards the end. So a bit of a frustrating year, as you can probably hear in my voice. I've got great stocks, but what do? I've got to follow these trends. I've done this for 35 years. This market action can happen. It's the worst kind of action because if you don't get prolonged uptrends, you get a buy, but you get nowhere to raise your stop loss to lock in profits. So if you then go below where you bought, you're obviously locking in small losses. And if you get in and out of the market 2 or 3 times, 4 times in a year, even if it's 3% at a time, it can add up to 10%, 12%, or the like. So, at the end of 2014, still difficult market. I've got great stocks. I still on the balance of saying that next year will surprise because there's a lot of contrarian views out there about it being a difficult year. When everyone agrees it's a certain year, it's normally going to be a better year. And in the resources and mining sector, it's so beaten up at some stage, there's going to be fantastic opportunities there. So right now, I'm sorry this week, don't have anything too exciting to say. So I'm still in it. We've still got our positions. We maybe have less positions than normal. What I will say is in our private placements, there's been some magnificent companies there. Um, the Insiders Club, we run the Insiders Club Undervalued Superior Earnings, which is mainly what I talk to people about. We have another service that is fund optimization that follows exchange traded funds. And then we have special situations. We're not necessarily undervalued with superior earnings. They're companies beaten up, ready for a turnaround. We just need to wait for the catalyst for that to happen. Or it's private placements. This is companies you buy before they get to the stock market. And we've got two of the best private equity companies sourcing deals in the UK, in the US. So if you're interested in that, let me know, and I'll be back to you next week with hopefully some better news than this week. This is Graham Bibby on the 11th to 12th. Over and out.